we more or less create an internal flywheel where, as we acquire more Bitcoin, we're able to build more Lightning channels. We're able to explore more of the other revenue-generating opportunities that Danny's alluded to during this chat. And again, in storytelling terms, for investors who don't know or don't care very much about this, I think of it as a trifecta. It's a gold rush trifecta. So if you get over the line of accepting that, Bitcoin may be a bit like gold. Okay, so if it's gold, you acquire the asset, but you also want to be exposed to the infrastructure, the picks and shovels. So we want some gold, we want a pick and shovel business, and then at B Hodl, we also believe that in that gold rush, we have the best prospectors to find that gold and to run the pick and shovel business as well. So in other words, we're a three-legged stool, and we cover all three parts of the gold rush: the asset, the infrastructure, and the people.
Danny, Freddie, how are you both?
Very good, thank you. How are you doing?
Yeah, very good. Very good. It's good to have you both on the podcast. I was thinking this morning, I was like, Freddie, you've been on, but Danny, I'm not sure. I don't think you've been on the podcast.
That's a good shot. I'm not sure if I have. Maybe not. I think
FCA have kept Danny in a box, haven't they, for the last 2 or 3 years?
Pretty much. Which is an answer to one of the questions I'm sure we're going to get at some point.
It's so good to have you both on. And for people that don't know, Freddie, you're the CEO of B Hodl, and Danny, you are the CBO at B Hodl. Yeah. Oh, that's a mouthful. Which is Chief Bitcoin Officer, which is nice to see. And like, this is a thing that people have been talking about for a while, like that position coming forward, and it's going to become very popular in the future. But what we're going to do first is just a little bit of background on you both before we start going down all the questions. So Freddie, can you go first and just like a little bit of like who you are and your background?
Sure. So, I'm sick of my own voice, but in case people haven't heard it already this week, I've been working in fintech and engineering startups for a number of years now. Initially as a lawyer, and then more on the business side. Back in the day, I used to be an M&A lawyer and had all manner of different practice areas, largely focused on private equity M&A. Then during the financial crisis, more focused on special situations, restructuring, insolvency, which is essentially helping damaged businesses or businesses which are struggling in order to stay solvent, to avoid insolvency or bankruptcy. And then more recently, with my co-founders of Bitcoin Policy UK, which we started up about 2.5 years ago now, we have been actively lobbying and advocating for Bitcoin at a regulatory and government level. So I've written a lot of very lengthy and arguably somewhat uninteresting papers, which I send to people and also deliver evidence in person in Parliament and in select committees and so on, really trying to get over the hump that I think we're all facing, which is that there's an enormous well of misunderstanding about what Bitcoin is and how it functions, and that getting over that hump is essential to us building the industry into what we want it to be in the UK. And then I wanted to move out of the fiat world for a while. Danny and I met a number of years ago, and an opportunity came up to work together, which I jumped at. I've had a huge amount of admiration for Danny long before I met him in person, what he's built at CoinCorner, and the opportunity to work with him on B Hodl was too good to turn down. And maybe a quick segue over to Danny there.
Cheers. Thank you, Freddie. And thank you, Jordan, as well, for having us both on. And I think as Freddie, I think you've said already, and you say it many times at the minute, sick of hearing our own voices, aren't we, with the amount of conversations we're having at the minute, but it's all good fun. So I'm Danny Scott, for anybody doesn't know who I am, co-founder and CEO of CoinCorner. I'm a software developer by trade, so my background's on the tech side of things. I got into Bitcoin in 2012-13 sort of time period, was mining Bitcoin in that sort of time period as well, scaled up to a decent size sort of mining operation, but obviously UK electricity costs kind of killed that, and we weren't able to really maintain that as a business model. But we wanted to stay in the Bitcoin ecosystem because we were kind of just learning, I guess, at that point about Bitcoin, about altcoins, about everything around the technology of it. So we was playing around with all sorts of ideas and concepts, and we eventually settled on CoinCorner being a Bitcoin exchange. With the focus on the UK market, there was very limited at the time in the UK market. So we decided to create CoinCorner in 2014. Since then, we've done everything you can possibly think of in terms of the Bitcoin exchange piece and the industry around us, from obviously regulations, the security aspects, the custody aspects, the innovations, I guess, around Bitcoin itself as well, and building all the products around that, the banking world and all the hurdles we've had to cross along the way. It's been quite a journey. I think we've probably covered every area of Bitcoin you could possibly think of through that process, including merchandise with Mount Socks and Bitcoin BHodl, as some people may be aware if they've attended one of your conferences, actually, Jordan. They'll have received some socks, I'm sure, at some point. But one of the big things with CoinCorner was we were a custodian effectively for CoinCorner customers at Bitcoin, and that's a great thing. Obviously, we have a lot of customers that are then custodying the Bitcoin with us, but CoinCorner doesn't make anything on that Bitcoin custody, so we don't actually charge for that. We don't generate any revenue on the back of that. It's effectively a risk to an exchange. Every exchange is pretty much the same scenarios. It's a risk that they carry for the customer in that respect, and everybody out there for many years has been looking, how do you generate yield on Bitcoin? And we're no different. We've been looking at that for many years. Myself and Alan Farrington, who is also one of the co-founders of B Hodl. Alan has been the where does the yield come from guy, and he decided, myself and him decided that we'd look at how do we actually generate Bitcoin native yield, and finding methods and ways to do that. One of them being Lightning and Lightning routing, and other various methods around Lightning. So that's kind of where the initial idea came from. We set up as well another company between ourselves that focuses around exploring the different concepts and ideas around Bitcoin yield. And that's kind of where we then snowballed into what is B Hodl today, bringing Freddie in there. As Freddie's mentioned, we met a couple of years ago and kept in touch. Freddie, all the work he does from the policy side has been absolutely amazing for the UK. It's needed. He's been himself and his team at the Bitcoin Policy UK have been incredible in what they do. They are under-resourced, underfunded, everything around it. So hopefully that can change going forwards and help support the ecosystem in the UK. That's hopefully something that we can help support from a B Hodl perspective as well going forwards. But the work Freddie's done around that, I can't speak highly enough of it. From an exchange point of view, from CoinCorner, it's very, very difficult trying to deal with a lot of the regulatory and the policy side of things, where obviously we're going to push for as low a barrier as possible, whereas the regulator will push as high as barrier as possible, and you kind of be in the middle. But having an independent company party like Bitcoin Policy UK, there's a couple of others in the UK, but non-focused around Bitcoin only. That is incredibly powerful and helpful for exchanges like CoinCorner. So yeah, it's what Freddie's done. Massive admiration for that along the way as well. Sorry, I'll stop rambling on and we can jump into
No, I totally agree. I second that as well. Yeah, it's nice hearing, because I think not many people know this, but back when we were doing our conference in Edinburgh, CoinCorner and Danny and Molly, like, you were one of the first people we contacted about it, and we were like, we've got this mental idea. What do you think? And you guys were like, yeah, we'll support it, we'll back you. It just reminded me.
Met.
Yeah.
Oh, was it?
Yeah, and so in fact, Jordan, it's your fault that all of this has happened. So I mean, it's credit to you. That to this day, that was one of the best conferences I've ever been to. Danny and I met there. I met Molly there as well, from CoinCorner, and we left that conference full of a desire to try and do something positive to push the industry forward. And you remember you put together some meetings the January following that in London. rough ideas of pulling together a bunch of professionals to form a policy institute, and that turned into Bitcoin Policy UK. So thank you.
Good. I'm glad. Like, a lot of things have sprouted from that conference, which is amazing. Like, I think it was just like the timing of it all. It was on you.
Sorry, it's a perfect example as well of grassroots growth and what we've experienced there, and in what you did, Jordan, with the Bitcoin Collective side and the whole conference. And that is exactly what we've tried to support, I guess, from a CoinCorner perspective for many years, in the meetup groups around the UK, and everything that is a grassroots approach to anything for Bitcoin. That is incredible to see. And as Freddie says, that effectively B Hodl has come off the back of that in some respects. So we have you to thank or blame for B Hodl.
Yeah, it reminded me when you were talking about the socks and bottles as well. I've still got about 50 to 100 pairs of socks there, and quite a few bottles as well. They are so good.
This is my Edinburgh one. You can see how beaten up it is around the end.
We need better quality by the looks of
that. Awesome, guys, and like, congrats on getting B Hodl to the, I guess, like, it's the finish line in terms of getting it to this stage, but it's also the starting line, because there's a lot of work, I guess, that have got like unimaginable amount of work that's gone in to get to this point. And now it's like, okay, it all starts now. But I'm just conscious that there'll be people on here that maybe don't know what B Hodl is, what's happened. So can you just like tell a little bit about, what is B Hodl, and the fact that you have just IPO'd?
Shall I jump in and then pass over to Danny? So what we are, very simply, and it says on our homepage, we are a Bitcoin Treasury and services company. So yes, there are lots of Bitcoin Treasury companies out there now. Very, very few of them. In fact, I can't think of another example. None of them have been founded specifically with that aim in mind, and also with our second and in some respects more important aim as well. So all of the other market participants have been, in some respect, very good, very profitable companies. In some cases not. Metaplanet, I don't think Metaplanet was profitable, but anyway, they were in the hotel business. All credit to them. They've amassed a lot of Bitcoin since then. Other companies like SWC had a profitable web production, web design business, and then also added the treasury strategy as well. We've started from day one. We've been founded with a team of Bitcoiners, a team of British Bitcoiners, to firstly accumulate Bitcoin, and secondly, more importantly in some respects, to use that Bitcoin firstly to generate revenue, and actually also with a longer time horizon, looking ahead to Bitcoin's evolution from just a store of value into a medium of exchange. I had a great conversation with David Parkinson from Muscat yesterday, and I have to credit him on this. This was his description of what we're doing. And I told him I would steal it, but I said I would credit him for it. So there's the credit. He said what we're trying to do is the equivalent of, in the late 80s, early 90s, building out very, very early data center capability and digging up roads and laying down fiber optic cables. And going out to the market and telling the market that's what you're doing may have seemed insane to people in 1985, 86. Why are you digging up all these roads? Why are you laying this incredibly powerful, high latency, high capacity fiber optic cable? What on earth is the point of what you're doing there? That's really what we're doing and what we want to aim to do as B Hodl. And I think that really goes to the heart of what everyone on the team feels and believes. It's always worth reiterating sort of the three different qualities of money. I wrote a post on this morning, actually. A good money needs to transmit money both through time and through space. So the medium of the store of value concept is transmission of value across time. So if you have a money, you want it either to keep its value or to at least keep pace with inflation, if not to exceed it. that means that your £10 today or your 1 Bitcoin today is going to have 1 Bitcoin of purchasing power in the future. So that's looking ahead through time. And then through space, you want a money that can move essentially unimpeded, and any monies that can be throttled or slowed down or censored are inferior monies. And that where we feel is where Bitcoin has an absolutely key advantage. And we want to be integral to building that piece of money. And then when you step back for a second, you think, what's the total addressable market on the globe for the movement of value? Forget how that value is denominated for a moment, but just think how much value is transferred. Money is one half of every single transaction that's made anywhere on the globe. Information already flows relatively unimpeded around the world, with a few notable exceptions, such as the Great Firewall of China, for example. But the flow of money and the flow of information are becoming synchronized more and more and more. And we at BHodl want to be integral to the movement of value over the internet. And I don't think that's been fully grasped by a lot of people who dismiss Bitcoin as a pet rock or something which doesn't do anything. I'll defer to Danny in terms of explaining exactly how that functions, but that's a high level concept of what we want to do and what we want to be.
I don't think I want to follow that now, so thanks, Freddie. Yeah, one of the things I would just want to point out is in terms of what you were touching on briefly before that, Jordan, in where BHodl came from, and it's the accumulation of years of conversations and experience and knowledge of information of what we've been gathering and pulling together into create what BHodl is today. It wasn't a last minute thought, let's throw this up and create a Bitcoin Treasury company in that sense. There's been many years of conversations and thought processes around what BHodl is becoming from a Lightning operational perspective. That's not something that happened overnight. Just wanted to clarify that piece of it really as to where we are.
Did this make it harder in the process of going public, like to have this element of it? Because as you said, like a lot of people don't understand necessarily what you're trying to do. And I was just trying to find the quote of Henry Ford, which is, if I'd asked my customers what they wanted, they would have said a faster horse. Yeah. It just reminded me, Freddie, when you were talking there. So did it make it harder having to go through this process, but with a whole new concept for a lot of people?
I think that's right. You know, if an IPO is one of the hardest things you can do in the corporate world. So anyone who's done it will understand. This is my fourth three. So I worked on the Deliveroo IPO on advisor side. I worked on the HelloFresh IPO, which IPO'd in the US. And I worked on another one that fell over. That was a Burger King franchisee in Turkey, weirdly enough. And one of the reasons it fell over was because of the Erdogan coup back in 2015. Anyway, that's a story for another time. Being able to offer your shares for sale to the public is a big step for any company, and it's very, very highly regulated and hidebound. And there are an awful lot of boxes that you need to tick in order to make sure that you're doing that fairly, properly, and in compliance with all law and regulation. So much like, you know, picking up a laptop and using it without thinking what's inside it, or jumping in your car, just turning the key, to the end user, the process is supposed to look very, very simple. You go to your trading app or you call your broker and you say, I'd like to buy some shares, please. But in order to get you to that point, an enormous amount of work and compliance and blood, sweat, and tears has happened. And if anyone hasn't done it, I mean, I don't particularly recommend it, but if anyone hasn't done it, it's often difficult to appreciate quite the amount of work it's taken to get a company there. And to your specific point, I think you're correct. Not only are you dealing with a very, very complex, lengthy, and difficult process, but you're also dealing with an industry sector that not many people have a really good understanding of yet. And even if they do have an understanding, they're often a crypto investor, or, you know, they've got, you know, a Solana exposure or something, and they think it's all the same. They don't. I think to them, the wider transmission of value on the internet point is probably a little bit lost. Danny, what do you think? to that.
Yeah, no, completely agree. And I think that it was difficult conversations at times. And I think as soon as we've known this over the years, as soon as you bring something forward to a new company or whoever that may be, that you're dealing with a client, etc., where Bitcoin is mentioned and it spikes the interest, and people want to obviously jump in and get involved, ask questions and learn all about it because it's Bitcoin and it's exciting and it's interesting. So you end up going down rabbit holes with people, sometimes unnecessarily, where it's just because of the interest in it, and you end up with a longer conversation than it would have been if it was a company selling cars, for example, or something simple, or something that traditionally we understand and know. So the conversations do end up chasing down various rabbit holes, and in some respects, sometimes that actually can be a very positive thing, because they can ask questions that I guess we don't necessarily think of from an outsider's perspective, and then we have to think about how we then portray that to the public, or portray that to them and explain the situation. And I think Freddie's example earlier on there, or should we say David's example from Musket, in the sense of laying the data cables and doing that side of things exactly in the 80s, 90s time periods. Data center, I guess, exploration there in some respects would have been seen as potentially crazy. And we had the whole internet and intranet wars at one point, with everyone thinking intranet was going to be the way to do it. But obviously the internet became the thing, and data was very easily passed around the globe from the consumer perspective. But behind the scenes, the work that went into that is incredibly vast, and it's complex, it is difficult, and it's actually a very good example as an explanation as to what we're trying to achieve at B Hodl now, is laying them foundations for not only data to be pushed around the world, but value to be pushed around the world, where you would walk into a shop and tap your phone, your card, whatever that may be, and actually behind the scenes that's making the lightning transactions all around the world and settling almost instantaneous at the merchant's end, without the consumer or even the merchant needing to understand what's going on behind the scenes and where that data and that value is being transmitted. So we are hopefully laying them groundworks for that to be much more scalable, and a great potential going forwards for everybody within Bitcoin. I'd also like the pet rock side of Bitcoin as well. Sorry, often a little bit of a tangent here, but in terms of the pet rock side, obviously it's always a frustrating conversation, and you're always going to get them conversations. And I think very clear, myself and Freddie are big believers in Bitcoin in the long term anyway, and Bitcoin as a payment mechanism as well in the long term. You see many sort of vocal advocates of that, in the sense of like Jack Dorsey, even Adam Back and so on, where they have a deep understanding of Bitcoin and what they believe and what they want it to become in the future. And that's the vision, I guess, what some of the guys like that have laid out is kind of where we're trying to go towards. And everybody's going to have different visions and opinions, but that's, I guess, our vision aligns very closely, I guess, with Adam's, with Jack's, with other various people around the world. And Lightning being the obvious talk point at the minute is the Bitcoin's scalability option at the minute. Which is where our focus is.
Yeah, I'm with you. I often say that we are in that period of people understanding like Bitcoin as a store of value, but the next part of the evolution is people using it as a medium of exchange, because I mean that's why it was designed, like electronic peer-to-peer cash system.
Yeah.
So yeah, no, I love that, and I love that. Oh, David's. I'll give him a shout out as well. So
We've credited him enough now. I mean something.
It's such a great way of like looking at it and breaking it down for people that maybe don't understand what you guys are actually building. And it's not necessarily for right now, but it is for this is the way the world is going. We are building that infrastructure ready for it.
A good way as well, like with technology, underlying technology around things. So in terms of the internet and your TCP/IP data communication around the world is kind of like your layer one in some respect. And you've got the HTTP for the web-based communication. You've got SMTP for the email-based communication, but they all run on the TCP/IP in some respect there. So there's And then the groundwork Freddie's talking about of laying is kind of that underlying layer. And there's technologies technically that are built on layers and scales in layers. It couldn't scale as a layer one, similar to Bitcoin and in that sense. And I was trying to explain this to people of how you're using your smartphone now and the innovations around the evolution, I guess, of data being passed around the world. Came originally from people trying to share research reports around the world, and that kind of snowballed effectively into what we know as the internet today. But you pick up a smartphone, people pick up a smartphone today and download an app and go on the web browser and message their friends. They don't realize everything that's gone into building that, and it's all of them layers of technology along the way built where we are today. So we're the TCP IP of your Bitcoin layer one, and we've now got layer twos of Lightning, and there's a couple of others now starting to come around, and there may be your HTTP esque options, and then the software that gets built around that, like your web browsers, your live chat mechanisms like your WhatsApps, your Telegrams, eventually your smartphones and the apps around that. Like, they wouldn't have been possible without them foundation layers being built, and then the innovation occurs around the core and the base of that foundation. So it's a good way to look at it from, I guess, the internet and how we've evolved all the innovations around the internet that you take for granted these days. That couldn't happen without them data companies and all the innovation happening in the base and then building on top and on top and on top. So that's kind of where we see ourselves, and we do see this as a longer term play, in the sense of this isn't going to happen overnight or in the next couple of years. We're building these foundations for the decades ahead, effectively. It's going to take that time to have all gain that mass adoption globally, as we've seen with smartphones. So
I think you're completely right. And actually, Danny, it's great that you raised the internet, because I think that helps you historically contextualize kind of where we are at the moment. If you look back at the development of the internet, Eisenhower actually established ARPA in 1958, I think. And the internet that you described there, the exchange of packages of information, had two key qualities. Firstly, that it happened so early, and it was for the exchange of data between computers that prior to that were these gigantic things just sat in silos and in warehouses. And by gigantic, we literally do mean gigantic. When my mum first started using a computer, when she was doing her research, I think it was the size of a container. And so the exchange of information between those computers was pretty fundamentally important. The ARPANET developed eventually into the internet, and I don't think TCP/IP was actually first created until 1974. So you had a good 15 years between the early days of ARPA and ARPANET before TCP/IP came on the scene. And again, in protocol terms, it's fascinating to know that although TCP/IP has been updated since 1974, we're still fundamentally using the same protocol. And that's a key distinction, back to your question, Jordan, I think, around investors. A lot of investors will say, well, won't Bitcoin just be replaced by a new, better, faster Bitcoin? Mm-hmm. And that, I think, is a category error that people often make when they conflate Bitcoin with a company. So that's company-based thinking. Companies can obviously rise and fall. Friendster can be replaced by MySpace, can be replaced by Facebook, can be replaced by TikTok. Protocols tend to endure for an extremely long time because protocols are more like languages. Languages obviously evolve over time, but they evolve relatively slowly. And given that protocols are effectively rule sets that enable computers either to communicate with each other or to perform certain functions, once an agreed standard has been settled upon, that has the ability to expand globally and become universally accepted and used and useful over an extraordinarily long period of time, which is really what we want to do. And maybe the last point before I shut up, this is turning into a very ranty podcast, isn't it?
This is brilliant.
I think for me, the core idea is that money is becoming information. And at its fundamental heart, conceptually, Bitcoin is nothing more than a messaging service that tells you how much value is being transferred between people who have a key pair, essentially. And we are building the plumbing for that transfer of money as information to last for decades, for long after I'm dead.
such a good way of putting it. Like, I was smiling there because when I was at a conference on the weekend and I got asked on a like Ask Me Anything, what's like the biggest misconceptions and how do you deal with them? And with the common string that I could pull out of like the years I've been in is like the conflation between crypto and Bitcoin. And I used exactly the same example, but you articulated it far better than I did on Saturday. But using the internet and the transfer of information and the transfer of value, and like breaking Bitcoin down in that sense to make it relatable to what people know, because people know the internet and they know how much it's revolutionized the world. And this is what Bitcoin is going to do in the future. Well, we believe that Bitcoin is going to do in the future. Yeah. All right. Awesome. On to the next. Whilst we're on this thread, actually, let's stick on it. Let's go into Lightning a little bit more around like what's been like the simplest way you can explain Lightning, because I imagine you've been doing it quite a lot to people recently. What's the simplest way that you can explain it? And I know you've touched on it a little bit with the layers there.
Do you want me to dive in quickly, Danny, then hand over to you on the tech side?
Please do. Yep.
So again, I think it's useful to start with the layers idea and use an example that's often familiar to people at the moment. So Jordan, let's say you and I bank with Monzo and Barclays, let's say. If I send you from a Barclays account a payment to your Monzo account using one of the layers that we built on the banking system, that should appear in your account pretty quickly, and you'll see it like a £10 credit or £10 from Freddie. That's great. So what's happened there is that we've transacted more or less in real time. What actually happens behind the scenes, though, as we were saying earlier, there's an awful lot of plumbing that happens. So our banks, during the course of the day, they will keep a track of all of the payments that were made from Barclays to Monzo, all the payments that were made from Monzo to Barclays. And at the end of the day, they'll settle up between themselves. They'll batch those payments and they'll settle those payments between Barclays and Monzo. So they don't transfer money actually in real time. There's no real settlement there. So the banking system has these base layer settlement periods and base layer settlement actions between banks, between central banks, and on an international scale between national central banks. But it also has built these other quick payment layers like the faster payments. There's one at the Bank of England called real-time gross settlement, and we have Visa and MasterCard that other people are familiar with. So all of those are different payment layers that effectively enable transactions to take place in real time, or if you're lucky. And then you have settlement, which takes place much longer. Now, in the Bitcoin world, you have base layer settlement, which is on the blockchain, and settlement is ordinarily understood to happen when a transaction, a block is found by a miner, and the order of transactions in that block are then determined. And as soon as that block is added to the time chain, the blockchain is effectively unalterable unless it's orphaned or unless, for example, that it turns out not to be the longest chain. But those are sort of edge cases that we can probably set aside for the moment. It's typically thought good practice to wait for 6 confirmations before you regard something as fully confirmed on the base layer, and that's simply out of prudence. You can choose to be reckless and think it's gone through after 1 confirmation if you want. Now, although that settlement time is quicker than in the banking world, it's still too slow actually to transact in real time to buy coffee. And that's why, and I'll hand over to Danny in a second, that's why the Lightning Network and other payment functionalities have been built on top of the base layer in order for real-time transactions to take place, whereas settlement takes place later. Danny, maybe if I pass the mic over to you now for that.
Danny, can I also get you just also to touch on what B Hodl will be doing in relation to Lightning as well, on top of this explanation, because that was, a great explanation by Freddie there.
Okay, yeah, no worries. I can destroy Freddie's explanation there now. It's all good. So Lightning being the layer 2 built on top of Bitcoin, I'll keep this very, very high level. And please feel free to jump in and ask questions around what I'm saying here, just so we can see what has the interest and which piece of the puzzle. But for example, myself and Freddie might be running Lightning nodes, and we have a node each, which is just a piece of software running on a computer. We will lock in some Bitcoin between us. So I'll put, say, 1 Bitcoin in, Freddie puts 1 Bitcoin in. That's an on-chain transaction. That creates the channel between myself and Freddie. And we can move 1 Bitcoin back and forwards each direction. So I can send half to him, and he'd have 1.5, and he could send them one back to me, and I'd have 1.5, and he'd only have half. So that can go back and forwards all day long, as many times as you want. So that can actually transact what you think is theoretically only 2 Bitcoin locked into the channels. That could actually be 200 Bitcoins worth of transactions in a month going back and forwards. So that's at the very basic level. That's kind of like the core of what the Lightning Network is in terms of the channels and allowing that instantaneous communication between me and Freddie to settle that amount. It doesn't get settled on chain in any sense. It's just between the two of us, and we have cryptographic proof effectively that is legitimate, and we're not cheating each other in any respect. We will also be connected to many other nodes around the network, which will create the network itself, and everybody in theory will be connected to somebody through one point or another. So you can then route them. Transactions that happen on the Lightning Network will always be able to find a route to the point to the node that is looking to send the payment to. That's kind of at the very basic level. What BHodl would be obviously doing there is being that liquid initially is one of the strategies around it. We have maybe one of the misconceptions, I guess, of what Lightning is and how basic it is in that sense. As I've explained there's a basic mechanism between the two of us, and we've locked Bitcoin in, and there's movements happening there. And every time you're moving a transaction, the nodes in between are generating a transaction fee. So if I step back a little bit, myself, I have a node, Freddie has a node, and Jordan, you have a node. When I'm trying to send a transaction to yourself, but I'm not connected to you, I'm connected to Freddie, Freddie's connected to you. That'll allow Freddie to be the middleman and the liquidity provider to allow the Bitcoin, effectively, or the IOUs to settle from myself to you, Jordan. And Freddie will take a small fee for the purpose of moving the IOU from my side to your side. If we then eventually want to, that's the basic, of the routing concepts and making fees and generating fees on Lightning. If we then want to close them channels at any point, myself and Freddie will close our channel, and that will then settle back the amount that we have at each side. So by that point, Freddie could have 0.2 of a Bitcoin, and I've got 1.8 of a Bitcoin at my side. And when we settle that on chain, is another on chain transaction, and I'll receive 1.8 Bitcoin back. Freddie receives 0.2 back. That's the basic routing concept and the basic connection, I guess, between the Lightning nodes. There are many other ways around Lightning and how you can generate revenue. It's not just the basic yield from that perspective. There's no secret. There's other companies out there doing similar things. You have Lightning Labs have got a service called Loop, which allows people to loop outside. If you didn't want to close your channel, as we're talking about there, and going back on chain, you could still keep that channel open, but loop some of the liquidity out of it, and Loop, the service, would effectively send you the Bitcoin on chain as a separate transaction for a fee. There's a couple of other services doing similar things to Loop as well. There's other services out there doing cross-platform, cross-protocol transactions. So between the likes of not only on-chain to Lightning being Loop, but there's also Lightning to Liquid. And there's Arc coming around now as well with an option. There's Freddie with the Freddie Mint side of things, and the crossover there between Lightning. There's lots of services now. This is kind of where we're coming from with the internet piece, and you start building this core internet piece, and all of a sudden around it, innovation happens, and services appear, companies appear, being like Freddie, for example, with the Freddie Mint side, but that needs Lightning to be integrated to help. It makes it much more beneficial to have that Lightning integration, so it can be seamless between a Lightning payment versus Freddie One and Arc and all the other ones that are kind of starting to build around this now. But they all wouldn't really have been possible without obviously Bitcoin, plus then Lightning, plus these guys building around this. So we would be that middle tier and that liquidity provider as such for all these services around. And eventually, obviously, the services are all part of that same ecosystem. So we'd be looking at all different methods and methodologies around how you generate yield on Lightning. It's not just as simple as the routing side of things. There's many, many more things around, and I appreciate this is part of the difficult conversations we have with people from even investment perspective, where people are essentially looking to invest in BHodl, and you have to explain these kind of things that are alien as it is, but in some respects you are talking about future concepts that are not there yet and not actually active and live, but they are in theory possible and are slowly being built out, but they will come in time. And I think that's where our vision and where we see that is very similar to the internet and how that's built out, and the innovation, the evolution around what happened there is the way we would see them Bitcoin building out and the value around it. I know you have another question at a later point, so I won't jump ahead, because I think there's probably a good explanation around the stable coin side of things for some of that as well.
This was my next question. But yeah, because was it last year that Tether announced that they were going to come back to Bitcoin and Lightning? How does this, even from my education as well, like how does this change anything? Does it bring a lot more demand to Lightning?
Yep. I think
maybe. Sorry, Danny, you go for it.
You want to jump in, Freddie? Yeah, I'll just very quickly touch on something and I'll let you jump in there. But yeah, I think in short, yes, they will bring more demand to Lightning, and hopefully a lot of the volume from Tether USDT itself will start to come off the other chains, move on to Bitcoin, move on to the Lightning Network, which would be built on a much stronger foundation than. Don't like disrespecting a lot of the other altcoins and things like that, but they are what they are. But Solana, again, no offense to Solana, I've just picked on them there, but they turn off and on again every now and then when the network goes down, and you can't build a future financial system based off a couple of nodes going down, and you have to turn everything off and on again and reboot it in some respects. So already these guys are having these issues that are just not going to scale, whereas Bitcoin doesn't have that issue. And that's why you build that technology in layers, and that's why Bitcoin being slow, steady, doing nothing in some respect layer is that pure settlement layer that is built for the resilience, and it's meant to be built to be slow. That's the kind of the purpose of it in some respect, and we'll build then the layer 2s, etc. on top. And the Tether side, the USDT coming onto Lightning, again, a big part of this, just to highlight, then I'll pass over to Freddie, but the clever way that this is proposed to work via the Taproot asset side is that, for example, I'm trying to send, I won't get into the edge nodes and things like that just yet, but I'm trying to send some Tether, for example, to you, Jordan, but I'm not connected to you, but Freddie is. I may have USDT on Lightning. You may have or have not, but about to receive some. But Freddie doesn't have any USDT. However, he has Bitcoin liquidity locked in, so he has the Bitcoin. So what, for example, would come from myself, I would be sending USDT to you, but actually behind the scenes, it's effectively using the Bitcoin as liquidity, which is Freddie's piece, which is theoretically what B Hodl would be. And that would provide the Bitcoin liquidity to be able to pass that message on to you, Jordan, at your side, which will then eventually flip back into USDT. So it allows the whole network to basically make use of the USDT that comes onto the network without everybody having to have that token. It will still be able to be passed around using Bitcoin as that liquidity piece in the middle. So it means that, yes, as USDT comes onto Lightning, everybody in that network is already ready to go effectively, and it will allow that liquidity to be moved around at a much more successful rate than if it had to restart over again and do everything again. Sorry, Freddie, you were going to jump in there.
No. I mean, Danny, I actually love how we tag team this. You've got a level of technical knowledge that I can never aspire to, and then I come in and say some random stuff, and then maybe mention a Greek god or something.
See, I'm always saying you articulate things way better than I can come from me, so I articulate things incredibly poor sometimes. So I think you do really well.
No, but I mean, I absolutely love the technical stuff, and I wish I had that kind of level of technical understanding. I also enjoy the tag team. So Jordan, while Danny was speaking, I was reminded of one of your earlier questions around trying to communicate this to investors, because a lot of these guys don't have much time. And so that, I think that's part of where the storytelling comes in. And a simple storytelling point, I think, that emerges from what Danny was just saying there is simply total addressable market. I talk about TAM a lot. If you're not in the VC world or indeed the institutional investor world, is maybe not a concept that you're familiar with. So in a nutshell, total addressable market is how many people are going to want your product, and therefore, ultimately how valuable is your company going to be. If it's an interesting concept to think about in the context of money, because arguably the total addressable market for the movement of money is the entire world. So the total addressable market is gigantic, and particularly in a world where fences are no longer relevant, where international borders don't become an impediment to the transfer of value. A lot of our nation states don't like to admit that, but the architecture for moving money on the internet is already largely impervious to what nation states do. That's a fact of the way that the system functions. And so it's difficult, I think, for sometimes for an investor to understand, oh shit, when you're talking about, so what's the TAM for your product? Our TAM is potentially vast sums of, I think, again, you may want to fact check me on this, but I think the total movement of value by SWIFT in the last couple of years was over $1 quadrillion. I read somewhere that each 3 days, SWIFT processes the entire GDP of the entire planet. So to the extent that the Lightning Network can attract even a small degree of that amount of value transfer, you're looking at, firstly, a huge demand for Lightning, and secondly, a huge demand for Lightning products. So I think people who say, oh, you'll never achieve this kind of yield, or no, your idea will never work, they haven't taken a step back and realized what is the product. The product is the movement of value on the internet, and the total addressable market is therefore huge. And to Danny's point around, if you're dealing with the total addressable market of value transfer on the internet, what do you want to build on? Paolo, CEO of Tether, was saying just the other day, well, yeah, I want to build it on Bitcoin, on Lightning. Nothing else is robust enough to withstand that, and to have the necessary liquidity and throughput. So that's a really important takeaway point, I think, in that context.
That's such a good overview of Lightning Network, what you guys plan to do with that, and where potentially it's going as well. But I want to also turn the attention to, this is the way I kind of view it anyway. You've got the Lightning side of things, but also you're accumulating a lot of Bitcoin, as much Bitcoin as possible, I guess, to then fund these channels. Is that correct? How is that going to work, the relationship between the two?
I'd say it's completely fundamental to how the company works. So a lot of Bitcoin Treasury companies will simply acquire Bitcoin, and then they will effectively issue more stock, whether that's debt stock or equity stock, in order to acquire more Bitcoin. We will obviously do that, but we need to issue instruments into the market to raise money to buy Bitcoin, because the Bitcoin is integral to the way that we look to generate revenue and build out our business. So it's effectively a virtuous circle. We more or less create an internal flywheel where, as we acquire more Bitcoin, we're able to build more Lightning channels. We're able to explore more of the other revenue generating opportunities that Danny's alluded to during this chat. And again, in storytelling terms, for investors who don't know or don't care very much about this, I think of it as a trifecta. It's a gold rush trifecta. So if you get over the line of accepting that, oh, Bitcoin may be a bit like gold. Okay, so if it's gold, you acquire the asset, but you also want to be exposed to the infrastructure, the picks and shovels. So we want some gold, we want a pick and shovel business, and then at B Hodl, we also believe that in that gold rush, we have the best prospectors to find that gold and to run the pick and shovel business as well. So in other words, we're a three-legged stool, and we cover all three parts of the gold rush: the asset, the infrastructure, and the people.
Such a good way of putting it as well. You guys are on fire.
Sorry, yeah, as well, Jordan. Actually, just to jump in there, so yes, the Lightning, and we are focused on the Lightning conversation here and the talk there, but the accumulation of the Bitcoin The idea is to generate, in some respect, the Bitcoin native yield on the back of that, and obviously Lightning being that way where it's still in our custody, so we don't lose custody of the Bitcoin and it's still there. But in the admission document that we released for BHodl, we do talk around other concepts of yield generation on the back of the Bitcoin, and there is other concepts already out there. There's already other people doing a few different methods, all with different risk appetites and different angles to it, should we call it? And that is something we will continue to explore. We have clarified that in the admission document that we would look to do that over the next 12 months and explore these other routes, so it wouldn't just be all pure Lightning. But Lightning is the one that I guess we have the expertise in. It allows us to keep the full custody of the Bitcoin in our own custody, and it allows us to hit the ground running on day one with nodes that we know would be able to be revenue generating from day one. So that is why we are focused on the Lightning side. And I guess, as Freddie's already touched on there, in the TAM side of things and that market there, that audience, the size of the opportunity here for Lightning is value moving around the world. And building that foundation now for us is what we would see is have the mass value, I guess, in the long run, in the decades to come. So it makes sense that Lightning is the kind of the focus piece, but there will be other methods around that we will look to generate yield on the back of.
And you also have in there around, I think is it 1% going back to UK, the adoption of, I don't know what the wording exactly was, but the UK projects helping with the adoption of Bitcoin. Why add this in? And correct me if I've misworded it, misphrased it.
Freddie will explain this a lot better than I will, but just to highlight, what exactly this is, in some respects, some of the conversation we had at the very beginning in terms of the conference you guys did, Jordan, and that. And if that wasn't supported and driven the way it was, then BHodl might not be here today either. And the innovation around that wouldn't be here. So that grassroots side of things is so important to Bitcoin ecosystem as a whole, but especially the Bitcoin ecosystem in the UK. Sorry, Freddie, you're going to probably add to this slightly different.
No, I'd make exactly the same point, and I'd add a slightly technical point as well. Obviously, Danny and I are now both on the board of a listed company, and whether or not your company is listed, your duties as a board member are quite clear. And a primary duty is always to act in the best interest of the company for the benefit of its shareholders at all times. The board, given what they know of the industry and its potential for growth, and also the headwinds that it's currently facing, very strongly believe that supporting Bitcoin development, Bitcoin advocacy, Bitcoin companies in the UK will be for the benefit of BHodl and our own shareholders as well. And the reason is very simple. It's because this is a growth industry, and the more we can do as a company to help grow that industry, the more demand there will be for Lightning payments, the more demand there will be for the other products and services that we may offer in the future. And so from a corporate benefit perspective, and again, sorry for being slightly legally techie here, from a director's duties perspective, that's very much our perspective. So we really straddle two stools there. Firstly, we very much believe this on a personal level, that it's important that these kind of projects are supported. And secondly, we also believe that doing so is in the best interests of the company and likely to maximize value for our own shareholders over the long run.
Awesome. It's so important. Like, just from my perspective, seeing it in the UK, like running the struggles that companies and organizations, BP UK, and everyone that's been pushing Bitcoin, like how much of a struggle it has been over the last 5 years or so that I've kind of been in it. So it is good to see some of that then coming back into actually helping push that in different ways. Because it is so important, and it really does help.
Yeah, we hope so. It's like the cutscene from the end of one of the Avengers movies, where it's just Thanos reaching down for the Infinity Gauntlet. Well, fine, I'll just do it myself. And
Because we've had, funnily enough, obviously over the last 11 years at CoinCorner side of the UK, like venture capital side of things was incredibly difficult over the years. Like you especially like back in 2015, 16, even through each period, we had different, like through the cycles, we had different buzzwords and attractions. So we had like altcoins originally was the concepts after the Bitcoin side. Then we had blockchain concepts. Then we had ICOs. Then we've had the NFT hypes, and I'm sure I'm missing some in between there as well. But meme tokens eventually. There's all these different hypes along the way. And back when CoinCorner was searching for funding and venture capital funding in the early days, we didn't end up taking any in them early days at all, because we went to we went to a lot of venture capital companies in the UK. They were so far behind the US side in the sense of where their expertise and their knowledge were within the Bitcoin ecosystem. They didn't really understand Bitcoin at all. It wasn't within their risk appetite. There was just no funding for UK companies. Realistically, in the UK, it was just not there. The only ones, we had a couple that we had offers from, and we ended up not taking it because they were wanting, one of them, for example, wanted a blockchain concept of what their core business was around. And, we didn't see eye to eye on that. We were saying, we're a Bitcoin exchange. We don't want to go running down blockchain concepts. That technically, I was explaining why it doesn't make sense. It doesn't work, but they're here in the headlines of blockchain this, blockchain that, and supply chains and all sorts of things. So we didn't see eye to eye. We ended up saying no to that money because it just wasn't worth it. And that was a massive global company as well that was potentially going to invest there. But they would have took CoinCorner in a completely different direction, and we wouldn't be where we are today, being the Bitcoin exchange we still are, and supporting the ecosystem. So I think it's really important to me as well from the B Hodl perspective that we can actually help support the growth of these startup companies that are, whether they're startups, whether they're not-for-profit, whatever they are, that are helping support the Bitcoin ecosystem. We know, we've been through it, we've experienced how difficult it is to raise that cash. So for us to be able to have that, at least at a small scale, available to guys that are trying things in different ways in the UK, and if we can just help support, get that off the ground so they can grow into what hopefully they can be larger companies, then that's something that we'd really like to do.
Yeah, it's really going to help. I like to think it's really going to help push adoption of Bitcoin in the UK, because we do need it. It does feel like we are lagging behind the US quite a lot. So is that, I mean, I want to say like a huge congrats for getting to this point. And it's really nice to see like a team that I've known for a long time, like Danny and the CoinCorner team. Like I've known you guys for a long time now, and we've done a lot back and forward. And then Freddie, I've known you also for a long time, since the conference, and we've all done different bits together, I think, and it is just nice to see like there's like that Team GB going around, and like. It's nice to see this. I just want to say a massive congrats from me for doing this, and I'm very excited to see what you guys do next, because it's kind of just like the starting point, right? Even though I'm saying congrats.
It is. Yeah. We've done the first lap of the marathon, and we now need to keep running.
Yeah. No, thank you, Jordan. I think it is the unity that you've said, like Team GB there, in the sense of like that's exactly part of what we did with BHodl as well. We wanted to bring as many of the kind of British Bitcoiners together to help support this and help drive this, because I wrote an article a couple of years ago now on how I see, I guess, business and the long-term side of things within business. And a big part of that was talking around competition. And people we're in a brand new industry here, being in Bitcoin, and it's a growth industry. It's a massive opportunity from, we've already touched on the TAM side of things, and where it's at today is still very tiny in the whole global ecosystems. So we have such a massive market to grow into right now. We're not trying to steal market share off people. So I'm talking about CoinCorner here from an exchange perspective. And when I wrote the article, we'd not long acquired Coin4 from the UK side. And I talk around, it was bittersweet in some respects. It was great that we've acquired like one of our long-standing competitors in the UK, and we pulled their customer base into ourselves, which was great. And it felt like such a big achievement. And then the day after you've done that, you kind of think, okay, back to work. We're carrying on again. And we've just lost one of our allies because they were fighting the fight in some respects for Bitcoin in the UK. They were helping with Bitcoin adoption. They were helping deal with regulators. They were helping drive the education side. And we were all doing that together in parallel. And that's why I try and not treat us as competitors in that sense. And for me, it's more like we are, especially in the short term to medium term, we need to work in unity and work together. And that's the Team GB bit you've just touched on there. We should all be within the UK. It's still a very small community in the UK, and we should all be working together in the same direction, supporting each other in any way we can to make sure that we can increase Bitcoin adoption. It's exactly what we're all in it for, to increase that Bitcoin adoption. So there's no reason to be that competitive angle. It's definitely just work as a team, work as a whole, and hopefully we can bring some unity to that through the UK.
I agree, Danny. And to be honest, I think a useful example is a personal one. The three of us on this call may all be competing to acquire as much Bitcoin individually as we can, but we're still all friends and we're still all working together in the same direction to make sure that more people can acquire as much Bitcoin as they possibly can as well. And the fact that you're all Bitcoiners, but I suppose like you're all in the same arena together, and we know who our actual opponents are, and all pulling together in the same direction, I feel is more powerful than pulling in different directions.
Mm-hmm. Yep.
I couldn't agree more. Well, thank you guys for coming on. I've really liked having 3 people on the podcast. I might do it more.
Oh, good.
It's been good. So yeah, thank you guys. And
thank you for having us.
Hopefully I'll have you guys back on soon.
That'll be lovely. Really nice to speak again.
Thank you, everybody. Cheers, Freddie.
Cheers. Bye-bye.